This is Gerardo Del Real with Resource Stock Digest. Joining me today is the chairman and CEO of Gold Royalty Corp, Mr. David Garofalo. David, it's an absolute pleasure to have you on. How are you today?
Well, thanks for having me on, Gerardo. I'm delighted to be here.
For those that aren't familiar, as I mentioned, you're the chairman and CEO of Gold Royalty Corp, and we'll get into the business model in just a second, but you're the former president and CEO of a small little gold outfit called Gold Corp, which merged with another small gold outfit called Newmont in 2019. You're also the former president and CEO of Hudbay Minerals and former SVP of Finance and CFO of Agnico Eagle. So obviously that is a pretty impressive resume. I have to ask, what attracted you to Gold Royalty Corp? Because coming on as chairman and CEO after that type of success, I think speaks to your faith moving forward in the company, right?
Yeah, absolutely. I mean, the asset base is tremendous. And Amir Adnani, who founded Gold Mining, our parent company, upon which we wrote all of these royalties that we own, was a visionary in terms of accumulating these assets at the bottom of the cycle, anticipating a turn in the gold price dynamic. And that's happened. And now he's putting capital and sweat equity into these assets to de-risk them and create value by attracting outside capital, not only from the public markets, but from established producers who are otherwise quite project starved. So he's accumulated these 12-odd assets, development stage assets, that the industry lacks desperately. In fact, reserves are down 40% over the last 7-8 years in the gold industry. So there is a dearth of development stage assets, and gold mining is well positioned. And by extension, Gold Royalty, with royalties on each of these projects, is well positioned to enjoy the rally in the gold price and also the reinvestment in capital into development stage assets, which has become a lost art in the mining industry. There hasn't been any substantial mine construction over the last 7 or 8 years, and that's become an existential issue for the industry. So that's why I'm involved with Gold Royalty, because royalty companies are an extremely important part of the ecosystem when it comes to mine development. They provide a very cost-effective source of capital for the producers to build out new capacity.
Let's talk about the business model. Historically, as well as companies like Gold Corp and Newmont have done, and Agnico in the past, historically, the royalty companies, especially the bigger names, the marquee names, have outperformed the market and its peers, right? And so can you walk me through what the business model looks like for those not familiar and new to the royalty model?
Well, think of it as ETF with exploration upside. So you can very well go out there and buy a physically backed ETF, the GLD on the New York Stock Exchange, and you get your ounce of gold back in your piece of paper. And that's a great way to participate in the gold price. You don't take any underlying operating or capital cost risk by owning an operating company. But what you're missing is the exploration upside that the royalty companies provide. So we provide top line exposure to good assets, and in doing so, don't take any of the operating or capital cost risk. So we're similar to an ETF in that regard. But if the underlying operating companies that are running these assets are successful from an exploration standpoint and add to the reserves and resources, we participate fully in that as well. And so really, it's like an ETF with the upside, providing full leverage both to the gold price, but also to exploration success. And now, given the downward trajectory in reserves we've seen in the industry, now more than ever, the producers have had to reinvest back into exploration in a very meaningful way. So we will see in time growth in reserves across the industry, because there's going to be fruit from that effort on the exploration side. And there's substantial budgets now being devoted to exploration. And that means that the royalty companies will enjoy that exploration upside through their royalties.
We're seeing more and more the importance of good, solid jurisdictions, right? Oftentimes, even if you have a project of merit that's got great exploration upside and a great team leading it, government finds a way to get in the way, right? Can you walk me through the diversification of the asset base and the royalty base?
Yeah, so certainly within our portfolio, we're diversified across half a dozen countries in the Americas, North and South America, with substantial assets in each of them. And that gives us some geographical diversity. But what I would also say is that each of these assets are located in jurisdictions that are mining friendly. And that's important. So and when we talk about geopolitical risk, the importance of a well-established and systematic regulatory process to get permits, to operate your mines, to engage with local stakeholders is extremely important. And that's a key criteria for us when we're looking at royalty opportunities. We want strong operators. We also want to be in jurisdictions where these operators are welcome to run their businesses.
The company provides great liquidity. You're listed on the New York Stock Exchange. I believe you have fully diluted approximately just over 54.4 million shares outstanding. Is that accurate?
Yeah, that's about right. And we're about a $200 million market cap company, a very clean capital structure. We have no debt. We have $90 million in cash, which we raised in our successful IPO last month. So among the sub $1 billion market cap royalty plays in the space, and there's been a proliferation of them over the last couple of years, we by far have the most cash. And cash is king when you're looking at royalty opportunities, whether you're buying them from gold producers or base metal companies that have byproduct precious metals, or you're talking to prospectors who are looking to liquidate some value in their royalty portfolios. Cash is king, and we certainly have the wherewithal to participate in the market and be competitive for new royalty opportunities.
You mentioned the quality of the asset base and the jurisdictions they're located in. I gotta point out the scale, right? I mean, across the measured and indicated and inferred categories, if I add those two together, we're talking over 26 million ounces at a time where, as you put it, we're looking at an existential threat for a lot of these producers if they're not able to duplicate that reserve base and add to it, right?
Well, that's exactly right. And not only is it 26 million ounces of gold, but we have substantial amounts of copper byproduct and silver byproduct as well. So when you express that on a gold equivalent basis, gold mining's portfolio carries over 31 million ounces of gold and gold byproducts on a gold equivalent basis. So that's substantial leverage to the gold price and to copper, which is obviously fundamentally very, very sound in the current environment as the world looks to decarbonize. And we've got significant exposure to that through our royalty portfolio. And when you look at that accumulation of reserves and resources, that's bigger than some of the established producers in the industry in terms of their global reserve and resource. And I'm talking about the mid-tier and senior companies don't have that kind of inventory within their portfolio. And we have it within one company in gold mining, and we have royalties in each and every one of those assets in that portfolio.
The team that Amir and yourself have put together is an impressive one. Can you walk me through the team briefly?
You know, what I would say is the recurring theme among that team is operational expertise. We're not financial players. We didn't come at this as former bankers or former sell-side analysts. We have built and operated mining companies. I have over 30 years and been involved in the construction of 15 separate mines over my 30-year career. I've operated multiple mines. Ian Telfer is the chairman of our advisory board. Ian was the founding chairman of Gold Corp and built multiple companies over his career. Has been a very credible and substantial operator, a member of the Mining Hall of Fame here in Canada. So brings a lot of credibility, expertise, and depth of organization or depth of network, which we're leveraging as we grow our business. John Griffith was the former head of Merrill Lynch's mining franchise in North America. He joins us in his job as Chief Development Officer for Gold Royalty. So he has a transactional type of role, and he brings a lot of expertise, particularly on the royalty side when he was advising a number of companies in the royalty space in his banking career. It was actually my advisor on the merger of Gold Corp and Newmont. So we've had a long history, and I have a lot of trust in him. Also on the board, Alan Hare, who was my successor as CEO at Hudbay and was my chief operating officer there. And Alan has almost 40 years of experience as a metallurgical engineer, and he's a prolific mine builder, having built the 3 mines that we built at Hudbay when I was there, including the $2 billion Constancia project in Peru. He was largely responsible for our success in mine development construction when I was there, and has a long history of having done mine building over his career. In addition to that, we have Warren Gilman on the board. Warren runs Queens Road Capital. He manages Li Ka-shing's Natural Resource Fund and is a cornerstone investor in the company. Unusually for him, he joined the board. Normally, he doesn't do that for investee companies, but he's had a long-standing relationship with both me and Ian for over 30 years, and he wanted to have some fun. And he really liked the investment model. He's put capital behind it, but he wants to participate in that on a more meaningful basis. And also we're able to leverage his network and get involved in a lot of situations that are not necessarily available in the marketplace. And, you know, the advantage of having collectively over 250 years of mining operating experience on our board management is access to virtually anybody in the mining business in the world, which means we've become aware of royalty opportunities before the rest of the market is aware of them. And so we're trying to a large extent, avoid those competitive processes where royalties are overpaid for.
You answered my next question, David. I was going to ask you how you plan on leveraging that network moving forward to create shareholder value, right? We both know that gold is going through what I think is a healthy consolidation, right? We're talking near $1,800 an ounce gold here, but I think it's healthy from a broader perspective. But how do you plan on using that network and leveraging that moving forward? You answered that already, so I'll ask you a follow-up to that. What can new shareholders and existing shareholders expect here in the next several quarters?
You should expect us to responsibly deploy that $90 million of capital that you've entrusted us with. We understand that's your nest eggs, your personal wealth, and we're humbled that you would have entrusted us with that. What we will do is deploy that capital to opportunities that creates net asset value per share, that grows the net asset value of our business. Effectively, when you're running a royalty company, it's like a bank. We've taken deposits from our shareholders, and we're putting that capital to work in meaningful opportunities on the royalty side that generate strong and superior rates of return. And we're best positioned to do that, to assess our ability to generate those returns, because we've populated our board and our management with very, very experienced operators and mine builders who understand how mine operations are built to operate and understand the underlying and inherent risks in doing that.
David, it's been an absolute pleasure. Thank you so much. Is there anything else that you'd like to add to that?
No, look, I'm still a tremendous bull on gold. And I think really when you're buying royalty companies, you're looking for leverage for gold price. And we do provide that. But gold is going up simply because we're in a period of sustained quantitative easing, printing of money, undermining fiat currencies, low interest rates for longer. That's driving capital into gold and continue to drive capital into gold. People are looking for ways to preserve their capital in what will likely be a hyperinflationary environment where there seems to be no end to the spending that governments are willing to undertake simply by printing money.
Well said. I would love to have you back on and we could have a completely separate conversation just specific to that, right? Thank you so much, David. It's been great.
Thanks, Gerardo. Thank you for your time.